Hi, it's Anne Marie, and I'm here with Kola from Kolamortgage.ca. And Kola, we're just going to have a chat about your business and some of the areas that you specialize in. So why don't you tell me a little bit about your business, how long you've been in business, that type of thing?
Sure, sure. So I've been in business now for 8 years, specifically in the mortgage financing business, but 20 plus years in finance in general. So I've got a background. I used to be an equity trader, and I used to be in the wealth management side, and now I'm just working on the balance sheet. So before I used to ask for the money, now I give the money.
Well, I'm sure people are very happy to hear you give the money in an environment like this. Rates have been, pretty challenging for lots of real estate clients. So tell me a little bit about where you specialize.
Sure. We have a wide breadth of opportunity sets ranging from your standard mortgages right across the breadth to your private mortgages. And within that database of opportunities, we would specialize in what we would call the self-employed, specifically because those are the ones who have the most challenges and also have a continually changing regulation situation, as we have some pending in the year to come. And that's an area that we feel that if you're going to want to have an expert work with you, is definitely self-employed.
So for those clients, I mean, do you suggest that they speak with you first, try to get pre-approved before they go out into the marketplace and see what they can afford?
Yeah, absolutely. Because one of the I would call, are you familiar with Donald Rumsfeld?
No, I'm not.
So Donald Rumsfeld was worked with George W. Bush, and he had a famous saying where he would say there are known knowns, like I know your name, you know my name. There are known unknowns, right? Like I don't know where you live, right? And that's a known known,
Right.
I know that. But more importantly, there are unknown unknowns, things that I don't even know that I don't know. And that's where it really comes in that you want to speak to an expert mortgage planner like myself prior to engaging, because you don't know what you don't know in terms of considerations that we can utilize to make sure that you can qualify, and two, that we can reduce the cost of interest that you're paying over the long term.
Great. Okay. So I know that you also work with families who are separating or divorcing, and maybe you can tell me about some of the challenges that come forward in that environment.
Yeah, I think the first and foremost, the challenge there is, we're talking about a great disruption within the family. And one of the opportunities that we can assist with specifically is something called a spousal buyout. And what that is, the main takeaway from the spousal buyout is that it's a new purchase. So therefore, the loan to value amount, that's the amount we can use with a minimum down payment of 5%. So that's one of the areas where, because people will think, oh, I got to cover maybe half the equity in the home. No, we can actually utilize just 5% down payment and leverage the rest through the mortgage. So that's one of the first takeaways of that. And that provides stability for the family, whether that's, staying in the same school district, same friends and that whatnot. So that's an area you definitely, let's explore that and see if it's feasible and have that as a consideration, whether you're in mediation or doing it through the legal channels. So prior.
So do you do a consultation with families who are separating to see what the possibilities are for them?
Well, in most cases, the referral will come directly from the solicitor. So as an opportunity, hey, here is a client that has the situation. We'd like to explore feasibility of what the options are. Can they do a spousal buyout specifically?
Okay, so you're open to referrals from lawyers and from mediators?
Yeah, or even people themselves, people who are thinking about it prior to. Absolutely, right? I think because that way I want to make sure everything is eyes wide open, and everything we do is evidence based. So it's always going to be based on documentation. So, for example, one of the key takeaways is that for us to close on a spousal buyout, we would need a signed agreement, an affidavit, or a letter of declaration of obligations. One of those three.
Understand. So you want to paper the file with the legal outcome of the separation before you go to close the buyout.
Yeah, and set the expectation that yes, we can work the numbers, but ultimately we will need one of those three confirmations of what the obligations are for either party. Because if there's ongoing debts, we have to incorporate that
Yeah.
into the underwriting.
Yeah. Okay. So are your services you cover across the whole Greater Toronto area?
Yeah, not only Greater Toronto area, but also Ontario in general. And we also have licensing that we can access across Canada. So, for example, I went to high school in North Halifax, Saskatchewan. If there's anybody who's going to be listening there, we could do that. We could do it there. And I went to the first university out in Fredericton, New Brunswick. We could do it there as well.
Well, that's amazing. That's great to know. Is there anything that you want to tell people about the mortgage situation right now? I mean, it's obviously been a very challenging rate environment, but as a mortgage broker, you might have a little bit more perspective on that.
Yeah, I think the key thing about the mortgage environment and purchasing a home, so let's frame it as a real estate, is I think sometimes people try to time the market, right? And what I mean by that, I think the number one thing I would suggest is if you have an opportunity to qualify for a mortgage and purchase a home and it fits your budget, then I would take that opportunity as opposed to trying to time the market, trying to get a better deal. And I'll give you an example of that in two situations. You know, you've got people who were paused on buying, and then the rates have gone up over the last 10 months by 400 basis points plus. And all of a sudden, their qualifying amount has dropped anywhere from 20 to 30%. So, right. And it's like, oh, I used to qualify, but now I don't. And I said, well, that's because part of it, you were trying to time the market, right? It's like, and that's some of the drawbacks of trying to time the market, right? On the flip side of that, there were opportunities where people were trying to time the market. Oh, I'm going to wait till housing prices drop, and housing prices just kept moving up and up and up, right? I know it's slightly different now, but those are situations where the number one thing, if it fits your budget, hit the bid, don't try and time the market. It's the same thing in wealth management. Everybody, thinks they can do it themselves and be better than the market. It's not. It's not true.
Yeah, no. And what we talk about at my brokerage and what I talk to clients about is really affordability. Can you afford this property now? And if you can, in some ways, it's better to buy in a declining market or a market that's holding steady like this one, because ultimately you're going to pay your mortgage maybe for 20 or 25 years, and that mortgage amount is going to be less in a market like this than it would be in a hot market.
Well, and you maybe you can even speak to this, but I would think in a market like now, there may not be as many bidding wars in terms of people out there. I don't know that for 100%, but you could share on that. But I'm thinking, one of the other suggestions I would say is if affordable for those first-time home buyers, you may want to explore opportunities where there's already a built-in rental, because that way you can utilize that, because most of us don't have defined benefit programs in terms of a pension, and here's an opportunity to utilize the rental income to boost with the ongoing inflation and cost of living these days.
Yeah, and just create a retirement income stream for the future too. Sometimes,
for sure.
I would tell you that the Toronto market actually is experiencing bidding wars this month. It's really about properties that are, I would say, properly priced. They're priced at market value, or they're underpriced. And there are a lot of people, I would say, at the under $1 million point of the market, or just over $1 million point of the market, which sounds like a lot of money, but there are a lot of people out there ready to buy at that level. And so we are experiencing bidding wars for, larger townhomes, small houses, that kind of thing. There's other segments of the market where there's not that kind of movement. Regular condos, there's still a lot in the marketplace, so that's not as likely to cause you a bidding war. Or, if you're a move up or move down buyer and you already own real estate that's worth over, say, $1.5 million, you're not as likely to get yourself into a bidding war. You might own your own house, but not in the house you're going to move up to.
And that's where, if you're going into a bidding war, where you want to go in with a sense of peace of mind of what you can afford. And that's where I come in handy, because that's where the pre-approval process, at least you can share with somebody like yourself and say, yep, here's what we can qualify for. And I'm sure some of your client base may or may want to do a bully offer, but at least you would have the confidence to do that, given that you now know what your mortgage financing affordability maximum is.
Yeah, just a sec here.
Sure.
Okay. Not getting that to stop. Okay. Yeah, I mean, obviously, it's always my preference to work with fully qualified clients. It's a waste of my time and a waste of their time if we go shopping for property and they're not qualified. So yeah, always my preference. And certainly by the time we're getting to a place where we make offers, I make sure they're fully qualified, because I'll look for, a few weeks with somebody so that they can get a sense of what the marketplace is, because, some people are more serious than others, but I will not get to an offer situation without knowing my clients are fully qualified.
Yeah, and I think on that fully qualified situation, I reiterate back to the self-employed, because in the self-employed, you're really going to fall into three categories. One, your tax income qualifies you, no problem, you're good to go.
Yeah.
Two, your tax income does not qualify you, so we're going to look at some options in terms of what we can do to maybe increase that amount. Or three, we can't even use your tax income because it's so low. It's not relevant, but we can use some of your 6 months bank statements, invoices, and contracts, that sort of thing.
Yeah, absolutely. And, I mean, some corporations obviously have retained earnings. There's potential there to, see
Sure.
it from a net, I guess, net worth perspective.
Yep,
So
and net worth will be slightly separate, but absolutely net worth is an option as well.
it can certainly help. I've seen in out there with banks in particular. I mean, secondary lenders, they have their own sort of thinking on issues like that. But okay, so is there anything else that you would really like to impress upon people about your own business, about the mortgage business
Sure.
more generally?
I would like to share that our team specifically has done over 7,000 plus different mortgage financing terms.
Yeah.
And we've done that over the last 20 years. Why do I share that? That's proof in the pudding of continuous customizing options for clients. And therefore, if we can't do it, nobody can do it. One, right? Two, just in terms of professionalism, I know people always like to get a notice saying happy birthday. But what's more important is when you call, we pick up the phone and we talk to you and we address your questions. And thirdly, everything that I do specifically, it will be evidence-based, because I'm going to risk mitigation using the evidence. There's no silver bullet, and it's all about customization. Because a lot of people fall, the person at my work, my uncle, they're making less money than me, but they got a bigger home. I said, listen, you don't know their financing structure.
No.
So let's just eliminate this comparison, thing that we do at cocktail parties, and come speak to an expert like me, and we'll do it based on evidence. And you walk in with peace of mind of what you can afford, and then we can access the design that will save you the most money.
That's great. Thank you for that. And I guess I would say as well, do you work with all the major banks? Is that
we work with most of the banks, but some of the banks are not in our channel. So definitely, so if you were to scale it, we would work with the banks, and then we work with what we call monolines. So these are financing firms that only do mortgages, hence the word mono. But ironically, a number of these monolines are also owned by the banks. I always use the example, we all watch Disney movies, but do you realize Touchstone Pictures is also owned by Disney? So it's it's like, so there's because one of the elephants in the room is a continuous business risk. There's no mortgage business company's going to go under, and even if it does, your mortgage is an asset that will be picked up on cents on the dollar. So other than the fact that you won't be able to go back to the same lender if that situation should ever arise, you're not at risk, right? That's why. Then we work with B lenders, and those are lenders where you may have a little your financial profile may have some issues with it, and therefore the risk profile changes. So it's just going to be a slightly higher cost of capital for that in terms of the rates. And then thirdly is where we would go into privates, and that's mainly for short-term situations where we know there's a catalyst where you can pay it off, short-term being 6 months to a year sort of thing. And again, the key thing is the rates will be higher there.
The rates will be higher, yeah. Okay, well, that's good to know. I mean, the reason I asked that is because some clients are quite attached to their own bank, right? And I've said, you're shopping for a mortgage. your bank manager, the interesting thing I find with bank managers now is they can tell you all sorts of things, and then it goes to
The
risk and
underwriter.
compliance, and they go, yeah, no. So,
Well, I'll tell you
anyway.
that just on that note, specifically, I always share people. I say, listen, let's say, for example, Anne Marie, you wanted to buy the best car in the world, right? But
Right.
you went to Ford dealership. What are you going to get?
Gonna get a Ford.
Exactly. Which may not necessarily be the best car in the world, right?
Sure.
So and then on that note, I always tell people say, listen, I'm going to go to my bank. I've been there for 20 plus years. I said, great. But you didn't do $200 million with that bank. We did. So there's a matter of we can actually have better financing terms in a number of situations, even with your own bank.
Yep. No, I can see it. Okay. Well, I want to thank you so much for having this conversation with me, and I really appreciate it. Kola is one of the mortgage brokers that I have under Mortgage Resources on my website. So if you're looking to find him and you want to connect, that's one place you can find him.
And you can find me at Kolamortgage.ca.
Absolutely.
And that's spelled with a K.
Okay. Have a great day, Kola.
Thank you.